Where did Bitcoin come from and where is it going? How are sidechains setting the next generation of Bitcoin applications, and is Bitcoin over-leveraged? Welcome to Word on the Block, the series that takes a deeper dive into blockchain and all the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast.News. I'm Editor-in-Chief Angie Lau. Well, Bitcoin, you could say, has come a long way since its white paper presented in 2008. More people, more transactions, not enough block space. And this is where Layer 2 comes in. Bitcoin tech firm Blockstream's Liquid network is taking on its biggest challenge to date, powering El Salvador's Bitcoin bonds for the first Bitcoin city in the world. Now, is this the road to what a lot of people in the industry are calling hyper-Bitcoinization? In other words, accelerated mass adoption by everyone. My guest today pioneered Bitcoin's proof of work in his denial of service countermeasure algorithm, that is Hashcash, as referenced in the original Satoshi white paper. And he joins us today as the CEO of the $3.2 billion unicorn Blockstream. He's a cryptographer, computer scientist, the one and only Adam Back. Adam, it is an absolute thrill to welcome you to the show.
Well, thanks very much for having me on.
Absolutely. You have been part of the emergence of Bitcoin from pretty much day one, to the point where in 2016, Financial Times speculated you could be Satoshi Nakamoto. Here we are today in 2021, going into 2022, with Bitcoin still in its teenage years. We've seen institutional interest accelerating. Countries are adopting, El Salvador using it as legal tender. When you reflect on this journey and all the work that you've dedicated to this space as a pioneer, a true pioneer, did you see this day coming?
Well, it's, as they say, there's never a dull day in Bitcoin. And I think the experience is year on year that, things happen in terms of institutional adoption, banking interest, and even sovereign interest at this point, just much faster than you would imagine. Basically, people would say, when we started at Blockstream, for example, in 2014, there were no banks essentially interested in blockchain or Bitcoin, and it only took a few years, and essentially every major bank in the world had a blockchain, lab to try it out, to try and understand new technology, and that kind of pace has kept up remarkably. So it's very interesting to be in an industry that's evolving and seeing adoption that quickly.
In the early days, as all the developers were kind of sharing ideas, developing what we now know as Bitcoin, what was some of the vision that even you had? Did you envision that eventually the world would accept this as potential, tender even? What were you building in the early days that you envisioned would come true?
I was involved in electronic cash systems, protocols going back into the 90s. And, a lot of the interest at that time was the electronic payments. So sort of permissionless, private, in the sense that, some of the electronic cash systems had a high degree of privacy. And so I think at that time, people were largely focused on electronic payments. And of course, those electronic cash systems didn't have the digital gold, the mining, and the sort of digital scarcity of Bitcoin, the asset class, right? So Bitcoin brought a new dimension. But, certainly for the first few years of Bitcoin, there wasn't really a market price or such. I think, I wasn't very actively involved at that time, but it seemed to be, more hobbyists at that point in time. And, as it became monetized and adopted and, used as an investment or an inflation hedge, I think that it's developed more use cases in people's minds effectively. So, there's certainly been periods in the time where people thought that, a $10,000 price was, crazy, unrealistic. And, here we are, in the $50,000 or $60,000 range, and people discussing whether $100,000 could come about this year or next year. So it just seems to keep growing, and of course it's scarce. And as you get more users and more demand, that there's that will affect the price, and the sort of you get, I guess, in finance, the concept of reflexivity, which is the price creates its own demand sort of thing. So it can be a bit of a Veblen good where people want it more when the price is higher, or something like that, right? Because they get confidence from what's happening, from the implied adoption, and so they take a look to see what other people are interested in, and they draw. They see people, their peers, or famous investors, or different people taking an interest, and then that causes them to, take a closer look, I guess.
In essence, the network effect, the digital network effect of Bitcoin adoption. Do you think this pricing mechanism, the market implications of holding Bitcoin as an asset against, what are really the consternations we're seeing in the global monetary system, that is also accelerating people's adoption of Bitcoin?
Yeah, I think it must, because of course there are many currencies in the world that have relatively high inflation, but it's a new phenomena for many people in the developed world to see asset price inflation arguably above 10%. I mean, that hasn't been seen for decades, or for people's adult lifetimes, basically, in many cases. So, and of course, it's a little bit below the surface. The official consumer price indexes are still low. Governments are trying to calm the market and say that, well, it's temporary or it's not very high, but and people have eyes. They can look around and see that the prices of assets they buy, prices of consumables, everything is going up. And so, and other things are getting monetized, So the stock market is basically going up with the M2 money expansion. So in an environment where you would think the stock market would be actually impacted, and so that causes people to get nervous about stock valuations. And if they have savings denominated in a local currency, of course that's deeply worrying, because effectively your savings are getting eroded at a very high rate, and the headline interest rates are close to zero. So I think it is a time where people are looking further afield, like firstly for yield, and secondly just to retain value. I mean, it's always the case that you have to invest to protect value, because most fiat currencies have an inflation rate, but that's become such an alarming rate that more people have to pay attention to that. So I think now typically gold has been a bit of a hedge short term, but I think Bitcoin is starting to displace gold in that role.
I don't think it's any accident that in 2008, in the heels of the global financial crisis, and one could argue that with all the quantitative easing, with all the austerity planning, across Europe, with all of these things that were put in place for a system that is too big to fail to not fail in future, I think people are still super concerned that none of the fundamental things that were a problem were fixed. Do you think that Bitcoin and now crypto and other digital assets that are creating essentially a parallel alternative for people is something that could at least create a balance that people are so hungry for from a philosophical point of view, even?
Yeah, I mean, I think that the other aspects of the kind of blockchain technology are more akin to shares and things. I think that's a bit more conventional, though more efficient, modern, digital. But Bitcoin, the asset class, is quite interesting, and if the adoption curve continues, could reduce the monetary premium in other things, in the stock market, in real estate, in gold, in artwork, things that people look to preserve value. And that could be positive. I think that over monetization of real estate, for example, makes real estate unaffordable for the average person, and that, reduces their enjoyment. So I think that could be positive in both directions, right?
That's exactly what we're seeing in Hong Kong. For an entire generation of Hong Kongers, home ownership, having their own home, having their own place to live is impossible almost because of the inflationary aspect of one of the world's most expensive real estate markets. It's become speculative, but against people's real world needs.
Right. Well, I mean, I think that there is a strategy that some hedge funds have been using, which is to buy real estate using leverage. It's effectively a way to profit from the asset price inflation. Because if they're able to borrow, institutionally at 1 or 2%, hold onto an asset that they can rent out in a market, and maybe the asset price inflation is 10% or more. They can do that for 5 years or a decade. They can make a lot of money, inflation adjusted, even because maybe the leverage is 75 to 90% loan to value. So there are that makes sense to the investor, but it pushes up the prices.
And if there's an alternative for leverage and investing, which is why we're seeing a lot of institutional interest in this space right now, is Bitcoin ready?
Yeah, I mean, I think that, there are lots of different ways to use Bitcoin for retail payments, for institutional investment. There are lots of different ETFs globally, some spot, some futures-based, and, individuals can, of course, directly custody and own Bitcoin, which is one of the more exciting things, the permissionless nature of it. So, I think not all transactions will happen in the same way, and people will have different use cases for Bitcoin, and so use different technology, some of it more conventional, like effectively a bank account or an ETF holding with a broker, yep. And others will hold it in more physical form. So while it's difficult for the entire potential users of Bitcoin to directly hold it on chain, there are different use cases that can use it in different ways. And so the retail payment technology, for example, using Lightning, that adds a lot of scale and convenience from speed. And then for traders, Liquid, which is a different layer 2 that Blockstream is one of the main developers of, is a bit more focused at trading use cases, basically. So it's just another layer which provides a different kind of section of transactional capacity optimized for that use case.
I want to talk about the layer 2 space. It has become increasingly critical to also, augment and I guess what is the word, to innovate on top of Bitcoin, allowing more opportunities to transact at a faster, speedier rate. Tell us about the layer 2 aspect of development of Bitcoin and other digital assets. How critical are the innovations happening in this space to the growth of cryptocurrency market as a whole?
Yeah, I mean, I think that it's sort of similar to the original kind of protocol evolution and growth on the internet, that there will be different protocols for VoIP, video streaming, web browsing, email, and so forth. And so, it's difficult to have a single protocol that's optimal for everything. And so, with Bitcoin, of course, Lightning is the most well-known one, and that is very good for retail payments and micropayments because the transaction settlement is near instant. And so that's very good for the user experience, and the cost is much lower, and it's more scalable. You can onboard more users, and there's less data hitting the main chain. But nevertheless, it still provides, it has some trade-offs, but it provides similar kind of assurances to the main Bitcoin chain. So I think that's a pretty exciting bit of technology development. And, the adoption rates in Lightning are very high, percentages per month. It's growing enormously quickly, and there's a lot of development activity around it. And so, in El Salvador, for example, people are both using on-chain transactions and Lightning transactions for cost and speed reasons.
Let's talk about El Salvador. It was one of the most incredible developments that we saw in the industry in Bitcoin this year, with the government as a sovereign, making a sovereign decision to use Bitcoin as legal tender. Your thoughts on how things are going in El Salvador, and how are you participating over there at Blockstream, working with the government there?
Right. I mean, so I think that we are like technology advisors, but primarily on the issuance platform for the digital bond, like the so-called volcano bond. So that's using Liquid, which is focused on financial instruments, smart contracts, and tokenized assets, but conventional security assets too, right? So the issuer of the bond is the El Salvador government, and the bookmaker of record is Bitfinex, the international Bitcoin exchange. And
is it changing lives in El Salvador? Is the perception of adopting Bitcoin, integrating it into systems, into retail, into government agencies, into the infrastructure of that country, are the expectations being met?
So I mean, from all accounts, there was a relatively low level of people with bank accounts. The ratio of people that were technically unbanked and operating cash only was very high, and to the point that there are now more Bitcoin wallet users in El Salvador than bank accounts. Individual bank accounts. So that's a pretty interesting statistic, and it's only been a few months too, right? So it's a very fast adoption.
That is an incredible statistic right there, and it's just beginning, as you say. With Bitcoin, and I gotta ask for your technical expertise. It's not a space that a lot of people understand. Obviously, it is a very unique, small fraction of people in the world who can really understand this space. But for the rest of us, there is an impression broadly that Bitcoin innovation is lagging. Taproot, for example, it's the first major upgrade we saw in 4 years. So what does this actually mean for Bitcoin? Can it be used in DeFi, smart contracts? And why is the cadence of upgrades so irregular? And in your view, does Bitcoin have more potential to reach?
I mean, I think there's a sort of a couple of factors here. So I think actually, the perception is sort of mismatched with the reality in a way, and that's because it's designed in layers. So, if you look at the internet and the base layer of the internet being TCP/IP, and the TCP/IP protocol essentially hasn't changed in decades, and yet there's an enormous amount of innovation on the internet, but it's happening in the layer above or in the application layer, and so that's actually quite sort of standard or normal for networks. Most networks like GSM, 3G data, they're all operating in layers in the network architecture. And that's considered, in engineering terms, a good way to do it, because you want the base technology to be robust and, to not have fundamental issues arising late. So you want it to be very stable and secure. And of course, Bitcoin's got, a very elevated aspect of that, because there's, approximately $1 trillion of value depending on that being the case. So certainly, the investors and users holding value on the network don't want to see anything that would jeopardize that. So I think that tends to mean that the core layer things are very, there's quite a high pace of software change. If people look at the open source repository, hundreds of developers making changes all the time. It's just that it has an extended, very high assurance, quality assurance process. So, some feature will be developed, but it'll be tested for a year. Where in other networks which have less value or less kind of caution or conservatism about safety, they would just try it anyway, and maybe the network would fail. But the network failing is not an option for Bitcoin. So I think that's where the the kind of analogy of modifying the flight control software of a super jumbo in flight. But Bitcoin is continuously operating, so changes to it have to be very well tested. And then, of course, there's a lot of very rapid innovation in applications built on top of Lightning, in a Lightning protocol, in a Liquid protocol. So in the layer 2s and in the application layer. So yeah, I think there's a lot of use cases on top in terms of smart contracts, transactions, decentralized finance. For example, there's HODL HODL, which is a trustless way to do Bitcoin secured loans. There's a lot of innovation happening in startups. It tends to be kind of value driven, so it's trying to deliver values to end users. Where I think some of the other platforms in the wider crypto space have tokens, and so they're more focused on advertising the token, and so they tend to be very heavy on marketing. Bitcoin doesn't have a marketing department. It just has, lots of different individuals that own it, and essentially nobody really, marketing it to the world, right? It's just marketed by organic adoption. So it tends to be kind of low-key messaging, I guess, right? And the people building on it are more interested in building lasting value because they don't have a token that they're trying to rush to market or sell or something.
And so, what's your personal view? Do you hold Bitcoin only? Do you think this is a one protocol that rules them all? Or how do you feel of all the multi-chain universe that's happening around you?
I hold only Bitcoin. And, stocks, real estate, stuff like that. But in terms of crypto, only Bitcoin. And I think that there's certainly room for innovation. So it's definitely interesting to see people innovate on lots of things. And of course, there are peer-to-peer networks, before Bitcoin, like file sharing applications and networks and things like that. And I think the general kind of business analysis of networks, of open source networks, is that it's hard for them to retain a lot of value because they are open, copyable, the switching cost is low. And so, one take on it, on this phenomena, is that the fundamental value in the networks, they are providing the utility value, but the speculative value has got vastly out proportion to the utility value. And due to the low switching costs and so forth, that eventually that should correct by kind of normal business analysis. If you looked at, if you treated a network as a business, right? It's an open network. There's no barrier to entry. There's no company that has, IP controls or that makes it hard to copy. Then you would expect the cost of a network operation to drop to, the commodity economics level, which is very low. So I think that's in the future for networks. Not that other networks can't provide value because they're providing, utility. They're providing services. But that utility has become disconnected with the speculative prices of tokens. That's my view. So I think in the long term that will normalize.
We're seeing it in real time, where you have projects that didn't exist a year ago that are dominating today for all of those reasons, because they have created a utility for users that offsets what another protocol, created, issues with. You founded Blockstream that focuses on streamlining use and transfer of Bitcoin. Where do you think we are today when it comes to the industry as more and more competitors flood into this space? There's definitely a lot more going on, many more companies, a lot more funding of, the exchange ecosystem is pretty high volume today as compared to in 2014. Of course, the new development being institutional investors and actual, financial institutions starting to offer Bitcoin products, taking custody, adopting custody technology, or even building applications involving Bitcoin. So I think it's come a long way in the years since Blockstream started. I got to ask you about block wars. And so for the part of the audience that doesn't know what I'm talking about, there's some animosity, if I could put it this way, in the layer 2 space. How do you view that, Adam? Is it more the merrier, or is why the animosity with other competitors in layer 2? Are they redefining the space that you don't agree with? What's going on there?
Yeah, I think the debate was more about the trade-off, and so different people had different views about what an optimal trade-off would be to see further Bitcoin adoption, basically. And two broad approaches were: one is to use layer 2 and keep the base layer decentralized and secure, and the other one was do it all on one layer. And so, effectively that was a kind of mixture of a business argument, like an adoption argument, and a technical argument. And so, of course, it was resolved, because that's some years ago, in the sense that the Bitcoin network has clearly got, grown the network effect, and the market cap reflects that, essentially the main Bitcoin chain was the trade-off that the market favored. And I would argue that actually the outcome was largely decided by the market. So it's kind of a free market situation where, the competing trade-off views were tradable. So people could trade their view, right? So if they liked one of the forks, they could buy it. And essentially, the sort of activist investors, I think people who just hold or were uncertain are not generally that influential in the market. Their trade won't influence the market because they didn't make a trade, essentially. But people who had strong opinions and traded their opinions, shorted the competing coins or bought more Bitcoin, sold a fork to buy Bitcoin, because you would inherit both of them. If every time there's a fork, if you're holding the original, you'd get both, and you could either hold them or you could sell them or short them. And so basically the market ended up saying that Bitcoin is the 99% and the rest are in the, kind of summed up in the 1%. So I think that, going into it, of course, a lot of people were uncertain, but, I think that ultimately the layered approach won in the market, and that, that was coincident with a technology view, which is that, for people familiar with kind of networking theory and internet protocols, that the layered approach is what other networks use. So it's a kind of, to my point of view, it's a better trade-off, I guess, right? And
it explains your unicorn status and the increasing investment into how you're building your company. And now I want to know how you are building and investing in the industry. You're putting your money, your investment bets in the industry. These are $1 million bets. I'll just list a few of them. Pixelmatic, this is a game studio headquartered in Hong Kong, founded by Samson Mao, another guest right here on Word on the Block. You also have money in Infinite Fleet. This is a blockchain-based MMO game. And then you have a DeFi platform, Portal. Why these companies? What do you see as the future that's being defined right now?
Yes, I've I have a few personal shares in the game. So it's actually there's a game studio, and then the game studio has a kind of security, which is a revenue share kind of token, right? So I bought some shares in that, and on the decentralized lending platform, I'm not actually a shareholder personally. I just was an avid user to try it out. I think it's a pretty interesting piece of technology. So basically, I'm keen to see the the full development of use cases around Bitcoin and like blockchain use cases with smart contracting. So I think the core protocol has a lot of flexibility, and not all of the use cases have been explored yet. So I'm interested to see that, because essentially there's an opportunity to sort of improve and rethink and reimagine many financial applications around Bitcoin, the new asset class. I think there's a lot of opportunities there. So, certainly the financing aspect, Bitcoin collateralized loans are quite interesting, but there are also many other things you could do with it. I mean, of course, the El Salvador bond, to come back to that topic briefly, is another very novel thing to do with Bitcoin, right? So it creates a hybrid financial instrument that's both a bond and gives some Bitcoin upside potentially to the bondholder, and usually. So, but in the wider financial world, there are lots of different types of financial instruments, and today there are not that many that are structured and involve Bitcoin. So, Blockstream also acquired a hedge fund, which is Advent Capital, and so we're bringing to market some additional hedge fund financial instruments. Basically, the first one that we did actually is the Blockstream mining note, which is a securitized version of a 3-year mining contract. So it gives you the benefit of 2,000 terahash of Bitcoin mining output. So after the 3-year term, you get the Bitcoin or cash equivalent of the Bitcoin, if you prefer, that was mined during that term. So, we put a lot of thought into the design of it from our experience of mining for many years. And so we think it's an interesting and attractive way to participate in mining, but it's also a liquid thing. So it's, you've got a security token, a security interest, in fact, and you can OTC trade it. Midterm, we're expecting listing so that you'll be able to trade it on an actual market. So Bitfinex has announced. Go ahead.
Sorry, go ahead. Bitfinex.
Yeah, so Bitfinex is one of the security token exchanges that is working with regulators to be able to list security tokens. The security token exchanges are a little bit of a new phenomena. Most of the cryptocurrency exchanges today are not licensed in order to list securities, but a few exchanges are going through that process, Bitfinex being one of them. And so they're looking to list the Blockstream mining node as a security. But it's also conventional security, so it can be held by financial institutions and other investors and individuals.
That is absolutely something to note. Increasingly, investors are introduced to so many more options and financial investment vehicles. ETFs alone, put that aside, the DeFi space. But if you're going after mainstream institutional adoption, security tokens, regulated exchanges, regulated products, hedge fund products. I think this is phase one. It's really incredible to see. I want to talk about mass institutional adoption. It's obviously helped Bitcoin to come to the spotlight. Mainstream drive includes tech veterans like, Jack Dorsey, Twitter, Google migrating to the crypto industry as well. What does this tell you about where the overall industry is headed to? Do you see a more balanced, more fiduciary approach from a regulatory side to how we're going to see developments in crypto?
I think it's a bit of a balance. So always there will be some, a good amount of bearer use, because that's one of the differentiators that, you don't have to go to a broker to buy Bitcoin. You can just receive it from a friend potentially, install a smartphone wallet and you receive Bitcoin and you're good to go within a few minutes. So that kind of use case is, if you like, the differentiating value. And then other groups of people who, maybe themselves don't have a direct use for that, can see that there's a market for people that do benefit from that, and so will look to invest in the technology. And in Bitcoin, there is the asset class. So they invest in the asset class because they can see that it has potential and that there could be many more users and adopters in the future. So, I think it's interesting to see the institutions sort of adapt to the unique properties of Bitcoin. So they have to find ways to interface to it, and so that has involved, custodians or indirect things like the futures ETFs, and even now banks that will offer. In a few cases, there are some banks that are offering Bitcoin-denominated bank accounts essentially. So, there's a very different kind of proposition, but you can interface those things. You can deposit Bitcoin in, you can withdraw it out, and you can use it then within the banking space as well as part of the collateral in a portfolio. Could be partly Bitcoin, partly shares, or something like that. So it's quite interesting to see those different worlds interfacing basically, and I think there's a potential there for the the stock exchange world to start to use some of the technology that comes from the Bitcoin world as well.
If we were to use a sports metaphor for American audience, I guess if I use baseball, are we in the first inning? But if you're a football fan or a soccer fan, what phase of the game are we in?
Yeah, I mean, I think of course, for us having observed and been involved in the ecosystem for a number of years, it feels like it's advanced. But I think in the wider scheme of things, it's actually still very early, because there is still quite a lot of confusion, or not people not understanding, and the kinds of people that are getting involved are the kind of smart money, the early adopters. So you see people like Michael Saylor, Jack Dorsey, and I mean, if you look at Michael Saylor's history, he was a kind of early adopter of mobile technology, right? So he saw a technology wave coming and dove into it. And so, you can see the same kind of logic in his mind that, wow, this is the new big network opportunity. And so he seizes it. But I think there's still many people in a wider investment community who still are not sure what to make of it, basically. And then there's also some kind of, regulatory and public company processes to work through. So, they're not essentially set up to own Bitcoin because it looks different. It doesn't fit into their existing, accounting boxes and asset type boxes. So I presume that will, via the early adopters and the smart money, that will gradually widen, and so people will be able to make decisions faster without having to wait for these, kind of regulatory and accounting analyses.
I mean, if I remember, working in this industry feels like dog years. 1 year is the equivalent of 7. Earlier this year, we were talking about corporate treasuries, more publicly traded companies that were willing to take a 1 to 2% bet into Bitcoin and other digital assets. If you were to look back on this year, in your view, what was the biggest development that most notably sets up for what we can expect next year?
Well, I mean, it's hard to predict, but I think the El Salvador legal tender was a bit of a was a big news item, and something that moved the timetable forward in a way that only Bitcoin can do. Suddenly there's a sovereign adopting Bitcoin as legal tender, a second legal tender. They have their actually using US dollars in El Salvador. But nevertheless, introducing Bitcoin as legal tender is not something that people were expecting to fall into place that quickly. And so it'll be very interesting to see if there have been other countries since that have had politicians talking about the prospect, or whether they could try it in their country. But it'll be interesting to see the pace at which that develops further, and also how the El Salvador Bitcoin City and the whole project goes there, because I think there's a prospect for something, a phenomena a bit like if you're familiar with the history of Singapore or Dubai, for a country to kind of leapfrog and bring a lot of foreign direct investment into the country and attract jobs and local jobs, trickle down economy, and a reboot of infrastructure as well from this kind of new bond program. So it'll be interesting to see how that plays. And of course, if that goes well, it may itself draw conventional bond market buyers and other countries into issuing similar kind of instruments. So they're circumventing
Sorry,
Yeah.
I mean, it just sounds like they're circumventing the need to go to the IMF and other traditional, global lenders in the market that might not want to make a bet in El Salvador. But Bitcoin bonds, that's a different value proposition almost.
Yeah, I mean, I think it's a kind of hybrid instrument, which is a bit, got some sovereign bond aspect and some Bitcoin aspect. And I think that, Dubai is maybe an apt analogy because, well, and the Gulf region because, as when oil was first discovered and combustion engines, it shifted the balance of power, it shifted the wealth of nations, right? And so in this, potentially more Bitcoin-centric world, what are the assets? It's like technology, access to low-cost green power, and willingness to seize an opportunity early, right? There's a first mover advantage. So, it sounds far-fetched at this point, but things have been moving so fast that it's hard to keep up, such that really could come to be the case in the coming decades, that we end up on a new monetary standard and it's energy-based. And so people who seize the opportunity early, built low-cost power infrastructure and oriented their economies around, commercially exploiting that opportunity, become wealthy at the expense of countries that are, late adopters or are less flexible in allowing, enabling innovation in their jurisdictions in terms of regulation and encouraging, innovation in their companies to incorporate and employ people in this sector.
If you were to rank those countries right now, who's the least adopter, slowest adopter in your view, that could potentially, be at risk of this scenario that you predict?
Yeah, it's difficult to say. I mean, I think that, of course, some countries have been, there have been a number of situations where countries have, discouraged Bitcoin temporarily and then, revised that. And so, India is an example, right? There was some rapid adoption. Then there was some uncertainty, high court battle with the bank, and now they are back on track. They're back in the Bitcoin game. People are resuming startups and opening new kind of businesses.
And now they're oscillating back to the parliamentary legislative bill that's ongoing right now, potentially banning crypto again.
Yeah. So, I guess in a sense, it's a global opportunity. So, the early adopters are going to win in the same way that people with oil resources at the start of the combustion engine driving the Industrial Revolution, they did well in the longer term, right? So,
well, to your point, go ahead.
Yeah, so I think it'll work itself out in the sense that as time passes and it becomes evident that other countries are benefiting from rapid adoption, it will change people's minds because it's a lost economic opportunity, basically. And
if we are still in the early stages, as you've said earlier, that this is only the beginning, there's still a lot of opportunity. So what are you betting on if we were to take a look at 2022? What do you think we should be looking out for in 2022? What's on your radar?
So for us, we're involved with a lot of different Bitcoin things, Bitcoin mining and financial instruments that are, sort of hybrid between a conventional security or a hedge fund product and a Bitcoin component. So to create, a family of financial products around Bitcoin to sort of address requirements of different types of users. So, there are certainly people who are a little worried about Bitcoin volatility, so that can be addressed with certain kinds of financial instruments. And, people who are heavy Bitcoin in their asset, in their portfolios, right? So, their portfolio has ended up over time predominantly Bitcoin, and that presents challenges, obtaining financial services of certain kinds in the market. So, again, we could potentially provide those. So we're looking at it, from the point of view of, I mean, it's a good way to develop products is to look at problems you have yourselves. Basically, if you're involved with Bitcoin, you have a Bitcoin holding, and you bump into problems, and you need a solution. So solve the problem, and you'll solve a problem for other people, and then they'll adopt it.
You've basically defined why we founded Forkast.News. So that is absolutely right. What is the problem, and what is the solution that you potentially see? And if you think that that's a valid thing, that you've just made a bet, you've just created your own first hypothesis. And the thing about the startup world is there's probably someone out there that also believes in a similar hypothesis. But I want to get back to where it all started. Do you think we will ever find out who Satoshi Nakamoto is? What's your theory? If we were talking to him right now, what do you think he'd say?
Well, I don't know what he'd say, but I mean, I suspect that we are never going to find out who it is, in the sense that, it's been quite a number of years, and a lot of people have been curious, and there doesn't really seem to be any breadcrumbs or any information that would hint. So, what has been said is largely speculative, really. So I suspect that, because time has passed, the prospects of that are receding, essentially. So that's my guess. I mean, you've got to imagine that he would be impressed by the progress anyway, right? So for all the reasons we were discussing, that, the level of adoption at this stage has got to be pretty unimaginable compared to 2009, right?
It's the creation has become a life of its own, and owned not only by the core group of which you were back then, the pioneers who helped build it, but certainly now, embraced increasingly by real people around the world. Adam Back, it was an absolute pleasure speaking with you. And I hope that we get to do it again soon. And it was just really great to have you.
Great. Well, thanks for having me on. It's fun talking about topics.
And so many of them too. That was Adam Back, everyone, CEO of Blockstream, and of course an OG in the Bitcoin space. And thank you, everyone, as well, for joining us on this latest episode of Word on the Blog. I'm Angie Lau, Editor-in-Chief of Forkast.News. Until the next time.